about or think about taxes in December during the holidays, but it actually is really useful to estimate your taxes before year end. So one thing is that you'll need to plan for your taxes next year. If you had significant gains, say you were yield farming and happened to be one of the lucky individuals who had gains of 400,000 USD equivalent in crypto over the summer. Just to remember that there's one canton in Switzerland that will let you pay your taxes in crypto, but in the US, unfortunately, you can't pay your taxes in crypto. So you need to have enough fiat currency on hand in order to pay your taxes, which might mean selling some of your crypto before year end and taking the tax on those before the close of the tax season. Because of course, the second that you sell some of your crypto for fiat, then that is also a taxable event. So you also have to report that trade on your taxes. And the other thing is you can use tax loss harvesting before the end of the year. So tax loss harvesting is basically looking at your overall portfolio holdings of crypto and taking the ones that have lost value before year end and taking those losses before they would be considered as, if you want to sell them next year, they would be carryover losses, which are subject to a cap. So you might have to carry over them for several years. So there's an advantage to doing it before the close of the year, right before the December 31st tax year closure. And you can also, next year, when you're actually filing your taxes, the IRS has made it very clear that as long as you're tracking your tax lots, so as long as you're tracking the time that you purchased and sold your crypto and the amount that you purchased and sold it for, as long as you are keeping all of that data in an organized fashion, then you can use specific identification accounting, which is basically saying, for example, say you had a transaction where you had several occasions where you bought and sold Bitcoin throughout the year, then you can take the maximum amount between those values to report on your taxes as your loss, or you can take the minimum amount to report on your taxes as the gain. So depending on which pairs of transactions you show on your taxes, then you can minimize the amount that your tax bill would be just through the accounting formula and how you organize those tax lots, which can actually be a significant savings. And depending on if you're a day trader, then it would be very common to use this technique because it's going to actually save you a significant amount on your taxes. And the only requirement is that you actually keep records of your tax lots, which if you're using any type of software is very easy to just keep the spreadsheet and historical data, or to keep it in the tax dashboard stored for future reference, or just in case, hopefully you wouldn't go through an audit, but just to keep them on record. And so the other thing is, if you have more questions about your specific tax situation, which I'm sure you do because it's complicated, and it just sort of depends if you were yield farming, if you had the uni drop, anything like that, then just feel free to reach out to us on our chat. So on our main page, which is the TokenTax.com, we have a little icon and intercom icon in the bottom right corner that you can just hop on and just ask us anything. Either it can be crypto related, and then we also have the CPA on board to answer more overarching questions. And certainly don't be shy. Now that the IRS has that disclosure question at the top of the Form 1040, we're sort of expecting that there are going to be more audits going forward. So it's just better to, even if you need to file amendments for previous tax years, it's, always better to just sort of get ahead of it and make sure that you don't have to be in an audit situation. But so with that, I'll guess I'll open it up for questions. And as I said, I head up the research and analytics department. So if there's anything that I can't answer myself, then I'll definitely put you in touch with our CPA on board or our support staff for DeFi, and I'm sure they will be able to answer it too.
Awesome. Thank you so much. That was really informative. Appreciate you going through not just, the regular crypto taxes, but the complicated stuff that now happens with all the liquidity mining and yield farming and, just incentive mechanisms that are now common with DeFi. We have a couple of questions that have come in, so I'm going to just read, I'm going to go through them one by one, but at the same time, people, feel free to post additional questions in the chat and we'll take them in that order. I think the first question was, do you have any thoughts on future legislation allowing for 1031 exchanges on crypto? I'm not sure what 1031 exchanges are, but if you do, feel free to chime in.
On 1031 exchanges in crypto. Yeah, I would have to ask if there's I would probably ask our lead CPA if there's anything specific to those exchanges.
It's the same
If
for
it
same exchange, right?
Is that? Oh, sorry.
That is the same for same or like for like exchange. Can you clarify what 1031 is?
Hi, I asked that question. Is it all right if I unmute myself?
Yeah.
This is
Right.
Jason.
Yeah.
So I'm a CPA. A 1031 exchange is a like-kind exchange. So the exchange, for example, like ETH to Bitcoin or whatever, would be a non-taxable event. So just because of the hassle of going from one currency to another is a massive headache for a lot of traders. Do you foresee, or is it potential to foresee the IRS legislating like-kind exchanges for cryptocurrency?
Yeah, it's for that. I don't have much clarity into whether there would be like new regulation on the horizon for like-kind exchanges. There has been a lot of discussion around it, but as far as the IRS putting it in writing, I could definitely put you in touch with our internal CPA, and also we have a lead EA who is sort of always in the feeds on different discussions on future tax legislation. So I could definitely put you in touch with her if you'd like, and hopefully she might have some better insights than me.
That would be great. Thank you.
Yeah. Go ahead. Sorry.
Oh, sorry. I was going to ask if there's sort of a way to share email addresses, or
yeah, if you want to put them in the chat, people can grab them from the chat.
Yeah, definitely.
Yeah, and I'll ask, continue asking the questions that are in the chat. But Kim, if you want to chime in anywhere, feel free to do that as well. I think there was one question about has the IRS allowed claims for casualty or theft for losing access to crypto, for example, losing hardware, wallets, seed words, etc., like it does for other properties? So, if you've lost access to your crypto, does it allow it to be claimed as a loss in your taxes?
or sorry, could you repeat the last part?
Yeah, if you
If
lost
the-
access to your crypto, maybe you lost your seed or your hardware wallet, does that qualify to be claimed as losses in your taxes?
Also, on the topic of casualty losses.
Mm-hmm.
So for casualty losses, it's a little bit of a tricky topic. So it has been kind of a gray area in the past, which was taken a conservative approach on. But there are different considerations that you could do for those losses, and I could connect you with our with the support group and to be able to help you out with your with the specific situation, if it was an exchange closure or exactly what happened.
Sounds good. Someone was curious to know how many clients TokenTax has who are being paid income in crypto.
Oh, how many have heard? So on the client side, yes, we do have quite a few clients who are being paid in crypto. Mostly so there's a lot of freelancers and white paper writers. So of course, in the States, being paid in crypto, it does seem to be a popular choice to be paid in DAI. So a lot of our clients we've seen being paid in DAI tokens as an aggregate number. I'm just trying to think over several years that I've been with the firm, how many clients we've seen being paid in crypto is, I mean, it's certainly, I can say that it's been growing. I don't know the exact numbers, but definitely we've seen more people coming to us and having to aggregate their income either from individual contract payments that were made in crypto, or if they're actually being paid their salary in crypto. It's definitely becoming more popular. So
Yeah.
we're seeing more of the mainstream adoption, which is great. I personally, I'm a little biased, but I think it's great to see that.
Yeah, and I assume with the rise of stable coins over the years, that has made it a little easier to pay people in crypto. I specifically had a question about the specific identification accounting. So I assume that's like FIFO, LIFO, that's what you're referring to. And if that's the case, does it need to be consistent across tax years? So for example, 2019, you used FIFO, first in, first out. Do you need to do the same every year, or you can change it per year?
Oh, so since the U.S. tax policy is year over year, you can take the capital gains and losses between years. So if you've done specific identification and kept the records, it's likely going to make sense to stick with the same method. And so when you say FIFO and LIFO is actually first in and first out, and last in and first out is the default. If you're not keeping records, is the FIFO method. But if you are keeping records, then you can do the specific identification accounting.
Got it. And then Jason had a big question there, so I'm going to try and read through it. As a CPA, I've noticed the IRS has been required more and more disclosures over the years. Your thoughts on the IRS requiring individuals to start disclosing wallet addresses? For example, the IRS knows what I have on Coinbase, but the IRS doesn't know what I have on MetaMask.
Yeah, I mean, it's an interesting question. Yeah, and I definitely have had this conversation with just sort of different people who are sort of regulatory adjacent. There is definitely a trend of increasing scrutiny, right? So at first, a few years ago, there was never even a disclosure question if you held crypto on the tax forms. Now, this for the 2019 year, there was the crypto disclosure question that they introduced as a checkbox. And now for next year, they're putting it right on the main form that almost everybody files, which is the 1040, right at the top. And with that, with the letters that they've sent out, and it does appear that we are seeing more